lot of stocks doing well.
Absolutely. Let's get back to the big theme, and of course we will have our technical experts join us to give market strategies, trading strategies at 10. But for the moment we are concentrating on the microfinance rules. In a bid to harmonize the microfinance rules, the Reserve Bank of India has released a consultative paper proposing a new framework. The central bank is proposing no prepayment penalty, no requirement of collateral, and among other rules, it has also sought feedback from stakeholders before these become rules. They have time till end of July. Joining us now is Mr. Chandrasekhar Ghosh, Managing Director and CEO Bandhan Bank, and Alok Misra, CEO and Director, Microfinance Institutions. Good morning, gentlemen. Thank you very much for joining us. Mr. Ghosh, first to you. Is it a good idea to make the same rules across banks and NBFC-MFIs? Is that a good rule for starters?
Yes, it is a very good rule, no doubt, because of the 30 years of microcredit are running in the country. Now is a good time. It can be like to align the all registered organization like to work in a same line on this.
Okay. First thoughts, Mr. Misra. What captured my imagination, at least, is the fact that the cap on spread has been, advised to be removed. In the early days of microfinance, a lot of people like Vijay Mahajan used to argue in favor that for very small loans, the spread of 10% is not called for. You think that's a good idea?
Good morning, Lata. I think, one thing I would like to say before I get into the pricing aspect is that of all the fundamental, very bold changes need of the hour made by the Reserve Bank of India, much of attention will be drawn to pricing. But let me tell you that even now when we speak, 70% of the market is in microfinance, which comprises of banks and small finance banks, is already deregulated in terms of pricing. Now, in terms of NBFC-MFIs also, the Reserve Bank of India has proposed this. I see that it is a very bold and positive step, but it also needs to be backed up by other consumer protection guidelines, which I think sure will come in the rules and regulations. And the pricing part of it, while in the base rate linked formula was causing the institutions to bleed because the base rate, which was not linked to the cost of funds of MFIs, but it was just a figure, which was base rate of 5 banks, that was going down since last 1 year, and that was squeezing the margins of NBFC-MFIs to a negative territory. That has been freed. And I would also like to just briefly digress and say that often we forget that when you put in strict interest rate caps, the global experience tells you that strict interest rate caps and issues like loan waiver, most often than not, do more damage than good. For example, in case of pricing cap, when you price the interest rate margin to a very arbitrary figure or a low figure, it does not give any incentive for the institutions to go to less remote areas, to include more persons which are more in need of financial inclusion, and that is not what the policy should aim for. I think Reserve Bank has recognized this, that these rules are only for 30%, plus that for broader financial inclusion, flexibility on pricing along with transparency. You would have seen that they have also given a fact sheet which the clients have to be given. There has to be a strict board approved policy, and along with that the SRO oversight. I think this is a very bold move.
Okay. Mr. Ghosh, I wanted your overall comments as well. What in the paper did you find good, and what do you find wanting, where you will advise change?
This is a discussion paper. It is not yet a circular. But what the new definition has given the microcredit, it is not mentioned as a group, not mentioned it is in women. Any of the people, if their income is a less than 2 lakhs in a urban and 1,25,000 in a rural, they are eligible to get this loan, and they are treated. If it is an individual or group, women or the men, they are like to treat it as a microcredit. So this is a big change are proposing this discussion paper. So group is not required to give the microcredit loan. But the second point here talking about it, that they will be like to give the loan to the people, and they will assess the family income. Earlier, it was in individual income. If I lend to the women, I'll be assess the women income, credit bureau check how the credit ordinance from the credit bureau for women. Now we have a need to check in the husband and wife or children, whoever the income people have in the family who are one kitchen, their all income together will be like to 2 lakhs. Then it will be like to treat it as a microcredit. And next one point is there is a no cap of loan size. Earlier it was a 1,25,000. Now if I say that indirectly it is a cap. If I see that the highest amount of income in a urban one of the borrower, the 2 lakhs per annual income, so I can give this as per new discussion paper, 50% of their income, that means 1 lakh. If it is in rural, I cannot be like to, that is also the same thing, 1,25,000 family income, it will be half on that, 62,500 rupees. So indirectly it has been capped. And this type of small ticket is needed to cap on this, indirectly on that. I hope that these are some of the things is new, but challenge is there, how we can be like to calculate the income of that level of the people. Yes. Because their income proof is not available. That need to the very good prescribed form and forget by the board. That will be like too big challenge.
Actually, Mr. Ghosh, yes, in fact, that was my question to Mr. Misra as well. Mr. Misra, the RBI said that the household income will be determined via a board-approved policy. Won't that be subjective? I mean, what if the banks assess that the income is higher and give larger loans without any repercussions?
Well, let us understand the context of it, because even now, for microfinance loans for NBFC-MFIs, there is a household income site for rural and semi-urban areas and urban areas, and the same has been extended. But in fact, while extending it to all other institutions, banks, small finance banks, which are active in that field, now not only retaining that old thing, which was always, you can say, open to subjective interpretation, RBI has added very wisely another layer of check, and that is that your monthly debt repayment obligations or a debt burden should also not exceed 50% of the household income. I think that a double check has been introduced. The earlier thing about household income ceiling was already there. Now the question of subjectivity, well, subjectivity is always there. They don't have neat income tax forms and all that when you assess them. And RBI's discussion paper acknowledges it. They say that there are various methodologies which have to be worked out, and that is where the important role of board, and I would also say of the SRO, like MFIN will come in, where we will have to devise a very clear and objective framework with data triangulation built into it, which can build into it. Yeah. So I think this nothing brings it new, but it only supplements it with a household monthly debt obligation.
No, I still find it difficult. Of the few people in my knowledge who I know are eligible for a microfinance loan, income is very fluctuating. I mean, how many jobs are they able to handle, and how long are they able to keep it? How many family members are able to keep their jobs? I think this is a very shifting sand, and I don't know how each board is going to solve that problem. So perhaps even a database, if you keep it, Mr. Misra, how often will you update it? There will be an issue over there of people even coming and giving you the data. A quick question, because I have both of you, I can't not ask this question unrelated to the RBI, but how is collection efficiency, Mr. Ghosh, considering that we have had a very difficult April, May, June?
No, if you see that the lockdown is continuously passing on that, every state is extending on that, and this is a very bad time on that, the not reach to the customer. And not only that, you see that the two types, the customer side one and staff side is the other one. And staff also we cannot be like to say them, but lots of the staff have been lost to the life. So all this situation is not very good. So collection efficiency, of course, it will be impacted comparative to the March.
Yep. Mr. Misra, you want to add to that? Should we pass through a difficult quarter?
Yeah. I think Ghosh has summarized both the challenges, and the recoveries have showing a very different trend across various states. For example, states with a hard lockdown like Chhattisgarh, or now we are seeing it situation emerging in Tamil Nadu, they might be dip in that, but overall it is a difficult period. I think the recovery is all India figure, if I have to put a ballpark figure, have fallen to around 55 to 60%. That's a tough time to go through. That's why we are continuously requesting Reserve Bank of India for more liquidity support to come out of this.
Okay. All right. Point taken. And that's exactly what we're going to discuss with our next guests, liquidity and inflation. Thank you very much, Mr. Ghosh and Mr. Misra, for joining in.
Thank you.
Thank you, Lata.
We will, of course, continue with the discussion paper. That's why it is in the public domain. But now we come to a number that is going to be extremely irksome for the Reserve Bank and for those who are investors and lenders.